as I've been talking about for the last couple of weeks, the markets have been really pushing up on this overhead resistance that went all the way back to February. We've been unable to get out of that until today. And surprisingly enough, today that occurred on the back of the fact that Netflix missed earnings fairly badly yesterday. Subscriber growth was much weaker than expected. But the saving grace today, the markets have started off pretty weak. We were down about 1/2 to 3/4 of a point on the NASDAQ. What saved us, though, was early comments by Jerome Powell, the Fed Chairman, saying, don't worry about a thing, folks. We've got years of growth ahead of us. Employment is great. And, in fact, we're just going to keep hiking rates until the cows come home because, well, the economy's just that darn strong. Well, and with that, the markets took off to the races. And, of course, we recovered the losses from this morning and actually managed to get above resistance. And we've been talking about this for a while. We needed to clear that resistance. Now, don't go jump off the wagon just yet and start throwing all your money in the market because we still have to close above this by Friday. If the markets fail over the next couple of days over continued Russia issues with the president or tariff issues, we still haven't heard back from the Chinese. That's something to really consider. Russia is dumping their treasuries left and right now, which is putting pressure on the 10-year yield. 10-year yield's been coming up the last couple of days, despite the fact that the dollar has also become stronger as well. So, again, we've got some things in here that could derail this market fairly quickly. So, again, we don't want to take our eye off the risk. We don't want to take our eye off the ball, so to speak. We always want to monitor the risk. It doesn't mean we can't be invested. Where a lot of people go wrong is that they say, well, if somebody talks about risk, that means they're all in cash. No, that's not what that means at all. It just means that as any good poker player or any good investor does over time is they watch the risk. Look, let me explain something real quick for you. Warren Buffett is an investor. Warren Buffett buys shares in the company, and he buys enough shares in the company that he walks into the boardroom the next day, looks at the guy at the head of the table and says, excuse me, you're in my chair. He can then drive the direction of the company. He can create relationships with other companies that he owns to help foster that business and help grow it and mature it. That's how he creates value. You don't have that opportunity. You and I am just like you, we're buying shares of some companies that we have no control over. We're just hoping to buy shares at one price and they're going to go up to another price, and hopefully someday we're going to be able to make some money with it. A good example of this is people say, well, if you just bought Apple back in 1980, you'd have $800,000 today. Well, that's true. If you invested $1,000 in Apple back in 1980, it'd be worth about $8 million today. I apologize. But the problem is that you made absolutely no money on that investment for almost 20 years before it actually made you money. Now, most people wouldn't have held an investment that long. So the point is that it's not just about investing, it's when we invest and how we invest, and most importantly, understanding the risk of loss. If we buy something that loses a lot of money, like an Enron or a WorldCom or a GE, and for every story of an Apple or a Microsoft or an Intel, there's the story of the GE, the WorldCom, the Enrons. Those stories exist. There's about an equal number of these things that go along. And then there's just a whole bunch of stocks that don't make money, period. They just trade sideways for a long time. So for us, it's just like playing a hand of poker. When we're dealt a hand of poker, if we've got a pair of twos, we may bet on a pair of twos. I'm playing with John, I know I'm going to win a hand with a pair of twos because he can't play poker worth a darn. But if I'm playing Danny, the poker shark, I'm going to be a lot more careful because he understands the game. So the point is that we have to monitor the risk of everything that we do, whether we're playing with a pair of twos or a full house, 4 of a kind. We measure our bet accordingly. Same thing when you're playing blackjack or any other game of chance. You understand the risk and the reward of those hands. When people gamble all the time, they understand they say, well, I don't like this hand, I'm not going to bet on it, I'm going to fold. But when it comes to investing, they just stick their money in and go, wait, that's going to make me money. That's not the way investing works. So yes, back to the point here is that we are breaking above resistance. The odds are right now, our hand looks pretty good. We're probably playing with a 3 of a kind, maybe even 4 of a kind right now. And the odds look decent that we're going to get a rally to all-time highs. Now, beyond that, I don't know yet. We'll have to figure out when we get there. There's going to be a lot of resistance when we get back up here to all-time highs. It's not that far away. We've already used up a lot of the fuel of the overbought condition that existed down at the recent lows has been completely consumed by really this very tepid rally just up to resistance here. We're now back to very overbought conditions. So we may get a little bit more of a rally, but I don't expect a whole lot. But the point is that the odds are good right now for the market to continue and advance here. We'll have to monitor what happens next. But there's also a reasonable possibility that something can go wrong and we could very quickly retest recent lows. So don't always take your eye off the risk and just assume that just because somebody talks about risk, well, that they must be in cash. That's not the case. Understanding the risk is what keeps you from losing a lot of money when you least expect it. Because for everything that we do as an investor, the goal is to make money over time. If we're spending a lot of our time just making up previous losses, well, we're not actually making money. So looking at all this, and as we talk about these issues going forward, always understand that we always monitor the risk and reward. And this is the same principles that apply to our portfolio management strategies for all of our clients that we manage money for, is that we monitor the risk and we manage that accordingly while being invested in the markets. We want to make money. We just want to do it carefully and over time. We like good, boring portfolios because they make us money and they don't cost us a lot of risk. So if you need help with your portfolio, need help with questions or comments, get by the website, Real Investment Advice. Schedule an appointment. You can ask myself, Danny, John, questions simply by clicking the Ask a Question button. We've got a lot of new products and services coming out in the next couple of weeks on our website as well for you. So there's going to be a lot of stuff there to help you manage your money better. But of course, as always, we always want to hear from you and what your needs are. So feel free to send us an email or come by the office. Love to visit with you as well. All at the website, realinvestmentadvice.com. Take a quick break. We're going to come back, pick up with Danny and John right after the break on the Real Investment Hour. Have a great day.
Follow Lance on Twitter @LanceRoberts or go to realinvestmentadvice.com.